Alrighty, we're going to give it one more minute for people to trickle in. Thank you for those of you who have come in on time, and then we're going to get started. We're going to start with introductions, and then we'll go straight into the presentation. Eli is going to present at the end, and then we can go right into questions. And we're probably going to end at around 10 or 10:05 or 11:05. But yeah, hey everyone, thank you for stopping by this morning. We really appreciate it. My name is Esteban Perez. I am a financial advisor or a business advisor with the Illinois Small Business Development Center here at the Illinois Hispanic Chamber of Commerce. And I'm also the director of the Latinx Tech Incubator here at 1871. And with me graciously, we have Eli Sanchez, a financial advisor at Merrill Lynch. Eli Sanchez has multiple years of experience dealing with clients across the range of multiple industries. But Eli, if you'd like to introduce yourself for a couple of minutes, feel free.
Absolutely. Well, thank you for having me on the call. What we're going to be dealing with today is basically retirement plans. The premise that I follow with business owners is primarily pay yourself first. Make sure that when you are starting your business, you extract a little bit, even if it's a modest amount of income, and set it aside. Take it out of the risk bucket, which is the business, because the business is always at risk, and save that for yourself and for your family. But we'll touch on that a little bit more later.
Yeah, appreciate it. Thank you. And it's super needed, especially I think small micro businesses don't really consider this until far into the future, but it's good to have it in your mind at first. And then also we're to host this webinar. We are also with the Business Affairs and Consumer Protection, and you can see Hortensia here in the video chat. She's been helping us host this and has organized this webinar. So thank you so much, Hortensia.
Thank you both for doing this. We appreciate it, and we're here to help.
Yeah, and we'll have our info at the end if you'd like to contact Eli or us at the Illinois Hispanic Chamber of Commerce. So we can get started. We're going to be talking a little bit about tax planning and a little bit about business organization, data organization, so that you can be ready to file for taxes at the end of the year and hopefully find an accountant that fits your management style. But just to get started, we're going to go over the main deadlines that you're going to need to consider, especially around income taxes, which is the main filing that you're going to be making at the end of the year. Of course, you would also want to consider sales taxes, payroll taxes, but we can get into that a little bit later if you have questions. But for our S corporations and for our partnerships out there, your deadline is going to be March 15th. And if you file for an extension, which the majority of businesses do, you would have to file by September 15th. And then from here, it's just going to be 1 month after for each section. So April 15th, we have our sole proprietorships, which is if you don't have an entity and you're pretty much running the business on your own, you're going to be automatically considered as a sole proprietorship by the IRS. And that's going to go on your Schedule C. If you're familiar with that, it's on your individual taxes, the 1040. There's another attachment that gets added to that that's called the Schedule C, which will have your sole proprietorship information or your LLC information. For the above, to go back a little bit, for the S corporation and the partnership, for the 1120 and the 1065, these are a little bit more complex in the filing. It's a completely different form than your individual taxes. So I'd highly recommend, especially for the first time that you're filing these forms, to go meet with an accountant and make sure that it's filed correctly. If you're business savvy, if you're savvy with numbers, you could probably pull off doing it on your own and just changing the revenue and expense numbers that you get. But again, there's tax laws and tax rules that are being changed every single year. So if you really want to take advantage of these deductions, it's probably best to keep a yearly or recurring communication with your accountant. And when it says K1 here after the 1120 and the 1065, that's going to be your personal, the owners of these partnerships or the corporations are going to get this K1 that basically gives you a summary of the income and the distributions that you received from this business. If you have multiple partners or multiple owners of an S corporation, each person will have that K1 and it'll distribute the income according to the percentage that they own in the business. So going back down, sorry to break it up a little bit, but going back down to April 15th, we kind of went through the Schedule Cs, and then we have the C corporation. The C corporation works very similarly to an S corporation, but it is a different form. You're going to see that it's an 1120 versus the 1120S above there. And then same thing, K1 based on your percentage of your ownership in the corporation and the income you received. And then after this, it's not going to apply to all of us here in the call, but just to have it in there, the month after that is the deadline for nonprofits, and you're going to be filing your 990. That's also extremely complex, I think more complex than the 1120 and the 1065. So if you have a nonprofit, please make sure you have an accountant. That's absolutely necessary. And this is all assuming that your fiscal year ends December 31st, which is, I think, the majority of businesses. If you have an accountant, they might recommend, based on your industry or based on your seasonality, if you're, for instance, in retail, you might change that fiscal year to end at a certain date. But I'm not expecting that right now. That's a little bit more into the weeds. So again, other taxes to consider other than the main income taxes at the end of your year. It's going to be your state income taxes, which you would normally file at the same time as your federal income taxes, but it's still important to consider just in case. Then you have your state sales taxes. This is especially applicable if you're in retail or if you're just reselling things online, for instance. That's going to be monthly on the 15th usually, but you can, of course, do it sooner than that, the month after. But you're going to be filing these sales taxes every month to the state to report how much you're selling, how much your cost of goods sold were, and then maybe some deductions that might help your tax liabilities there. And then, of course, you're going to have the city income and sales taxes, which are also due monthly. For the city of Chicago, you could probably also do these quarterly. They don't penalize you, I don't think, but of course, it's still good to just stay on top of it and just do it every month. But the city sales, I put these two together with the income and the sales taxes because it's all on one website. The city of Chicago is doing a better job recently of having a more easy to read, user-friendly tax dashboard for businesses. So again, same rules apply here. In my opinion, you can go to an accountant to get this all set up for the first time. And then once they show you how to do it, I think that this is something that business owners can take advantage of on their own. And of course, if you're, strapped for time, or if you don't want to do this, or maybe you hate paperwork, you can definitely always have your accountant take over. And then you are going to have your payroll taxes, which depending on your business, depending on the revenue you make, might change the deadlines. But normally you're filing your 940 quarterly, and then you're going to have the 941 annually, which is basically a summary of all of the quarterly taxes that you filed. But I'd highly, highly recommend, if you have W-2 employees, you could even be yourself as the owner, a W-2 employee, especially for an S corporation. But if you have W-2s, highly, highly recommend getting software, because payroll taxes change all the time. Payroll taxes are very complicated. Payroll taxes change with benefits that you add. So if you have employees, please use software. It makes your life 10 times easier, and it's definitely worth the money. And if you have any questions on what kind of software you use, there's examples would be ADP, Paychex. But if you have questions, you can always send us an email and we can definitely hop on a call. But that's like a broad summary of all of the taxes that you're going to be considering for your business over the years. But in order to make that process a little bit easier for you, I'd highly recommend getting digital bookkeeping software. This includes examples like QuickBooks, Xero, and Wave. Wave is actually a free alternative. It doesn't have as many of the features, of course, in the free alternative, but it does provide all of the essentials that you're going to need to at least generate the profit and loss statement and the balance sheet that you're going to need at the end of the year. So some of the benefits that you get from digital bookkeeping and taking advantage of this software is you get to save money on accounting fees. So when you go to an accountant at the end of the year and you say, hey, I need to file my taxes, they're going to ask you for a profit and loss statement. They're going to ask you if you've already done this or if you've already reconciled your books. Because if you haven't done this digital bookkeeping, it's up to them. And that might cost somewhere around $800 to $1,200, maybe even $1,500, depending on how many transactions you make per month. They're going to charge you more and more. So if you can do this, if you can learn it, you can save some money. But aside from the money, there's also huge knowledge benefits and educational benefits in understanding bookkeeping and understanding accounting 101. This includes, keeping track of the business finances, just being a little bit more organized, having this on hand whenever you need it. And then with these organizational tools, with all of this in one place that you can analyze and that you can read, you're slowly understanding business fundamentals over time. And this is going to be through reading your profit and loss statement, reading your balance sheet, cash flow statements, and then also being able to compare over time. So you can make month over month comparisons, you can make week over week, quarterly over quarterly, doesn't matter. But depending on what you want to read, whatever question you have in mind, you can make the software generate that kind of report. And then you can analyze, okay, maybe we're spending too much on fish. Maybe we're spending too much on utilities. Maybe we have to find a different place to rent because this is taking a huge chunk of our expenses. And being able to analyze that proportion of your expenses or your revenues, it can really make a difference in the kinds of decisions that you make in the future. And then, of course, you can quickly generate those reports. You don't have to do it by hand and you don't have to do it by paper every time. You can just click a new button and it'll generate that report. Once you have all of those transactions reconciled, once you've categorized all of the transactions that you need in that year or in that period, it's super easy to just be able to create a new report, give it to your accountant, give it to a bank, give it to an investor, and they can read it for you and they can understand your business on a whole new level. If you don't have these reports, sometimes an investor or a bank won't even consider you for a certain product because they might think that you don't understand your business well enough. And then, of course, with maybe more features that you might pay for, I know that some of these they just come with QuickBooks and Xero, but Wave might have them over a paywall. But you can also track your liabilities, which means tracking your bank loans over time, tracking your credit card statements over time, which is extremely important because I think a lot of small and micro businesses tend to forget and tend to just automate those monthly payments. And then that severely impacts your cash flow. And you might not understand that your business changes with those monthly payments that you have to be making. Sometimes you have to cut back. Sometimes you have to understand that you're going to be making more revenue in order to pay that loan. And then you can also track receivables, which means the invoices that you sent out, if they haven't paid them yet, you're going to keep track of everyone who hasn't paid yet. So that doesn't just stay in your mind or doesn't stay on a piece of paper that could get lost. So these are just some of the main examples that I give my clients on what are the main benefits of using digital bookkeeping software like QuickBooks or Xero or Wave. And then aside from keeping on the topic of organizing, it's super important to keep a data infrastructure, which is just a really fancy way of saying get a Google Drive or get Microsoft 365. Or if you're savvy enough or you have a tech guy, get an internal server, which is sometimes those broom closets that you see in some companies with all of those wires hanging from all over the place. Those are the internal servers that they keep all of their confidential data. All of the computers might connect to that server. It just keeps things really organized and also keeps things secure. Google Drive and 365 are, of course, on a cloud outside of your organization. So they are vulnerable to hackers, or maybe if your password gets stolen, that could also be a vulnerability. but you kind of compensate with the convenience of not having to set up this complex tech server. But aside from all of those vulnerabilities, there's still a huge benefit in being organized. Sometimes I think people are more comfortable having a metal file in their office with all of their, legal documents and all their tax documents, but you never know. Sometimes a fire could happen. Worst case scenario, someone breaks in, or maybe you just lose them. Sometimes you just forget. So I think, sorry, there's Eli, if you could, yeah. Sorry about that.
Sorry about that.
No, you're good. And so you can organize these legal documents, these confidential files in Google Drive, and there's even options to encrypt them or to put a password on specific files that maybe are a little bit more sensitive. So there's still some options to increase that security. But what really is the most important thing is that you can access these files easily. So when maybe you are, let's say, connecting to a new vendor and they're asking for your FEIN number, that's a number that you don't usually have on the top of your head until you're maybe many years into your business. It's just way easier to be wherever you are, whether it's on your phone or whether it's on a laptop in a different place. You can always pull up that file. You can always get that number, and you can basically do your work a lot faster. There's also better infrastructure for different team members or different departments to be able to upload their files, upload their work in one spot. So let's say your marketing just uploaded a new logo, and then you can grab that in your business development department as instantly as that, and you can create new materials, you can update all your materials, etc. And so I think this is one of the more important factors that a lot of small and micro businesses don't consider. I often tell people to treat your accountant like you would a lawyer or like you would a mechanic, even in that there's a lot of abstraction in pricing sometimes, and there's a lot of flexibility in how these relationships can work. So having someone that you can trust over time is extremely important. Your accountant is going to be your best friend as your business scales over time. And the larger you get, the more complicated your taxes get, the more complicated your books get. And it's just way easier to have someone on your side who understands your management style. So it's not someone who is maybe more aggressive in finding tax deductions, but you absolutely do not want an audit. An audit isn't always a bad thing. Like if the IRS has a yellow flag or a red flag on you, they might ask you to take a better look at your books. This isn't necessarily a bad thing, but it can be triggered by certain deductions that a more aggressive accountant can take. But let's say you're fine with that. Let's say you just want to save the most money possible and you're willing to take that audit, take that time to cooperate with the IRS. That's fine. But if you don't want that, you might want to go for a more conservative accountant who's just going to do what it takes to get it filed and then have the IRS just get off your back. So those some of the just main concepts to maybe consider as you're finding an accountant. But some other concepts to consider would be whether the accountant does the work themselves, whether they have a team, whether they're outsourcing to a different country or to a different state. There's like a line of communication that might get disrupted or might take longer. If you're a business that's a little bit more high maintenance and needs that communication extremely rapidly, having an accountant that does the work themselves and can answer those questions very quickly might be important to you. If maybe you're a little bit more hands-off and you just need those taxes filed at the end of the year, you don't even need to know the numbers, then maybe you're fine with an accountant that uses a bigger team with interns and outsourcing. But that's just something to consider as a balance. And then you also want to get to know the team. Maybe you just don't have a personality parallel, I guess, with them. You don't match, you don't fit with that team. That's also really important. I think the client should not only get along with the accountant or not only understand the accountant, but also understand that their team is there, understand where they are, understanding maybe a little bit of their work ethic. And then also what the accountant does. So maybe you're more interested, you don't really care about what happens in the bookkeeping, but you're really, really interested in making sure that you're on top of the deductions in your taxes. Getting understanding that the accountant does the taxes or maybe does the bookkeeping, and you need that person to do that, that's important. That could be something to consider. And then also, I believe very, very much in open pricing. Not every accountant has to do this, of course, and some accountants prefer not to, but I think it just makes the consumer more benefit. It benefits the consumer much more. It benefits the business owner much more if you can actually see why they're pricing their services in a certain way. So I believe in open pricing with a breakdown, like an itemized breakdown of this is exactly how much the bookkeeping is going to cost based on the amount of transactions you have. This is how much your payroll is going to cost. This is how much the income taxes cost. And this is why it costs that much. I think that's really important because it not only gives you a better understanding of why it might cost a lot and why it might be worth it. Because in my experience working at a tax accounting firm, we've had a lot of clients say that this is too expensive. I don't know why I'm paying for this. And it's just easier to convince them, or it's just easier to get them on your side and be on the same page when you have open pricing and you're just transparent. Being transparent is extremely important in this day and age. And then aside from that, let's say you made an agreement in the beginning and then your business grows and maybe your taxes become a little bit more complex and your accountant needs to charge you a little bit more for that. Having that communication ahead of time and having a new proposal that says, okay, your scope is getting larger. This is why it's going to cost this much more. That's also transparency. That's also really important. And then whether or not they specialize in your industry. Sometimes you might not need this, especially if you're a smaller business, but as you grow, there are going to be tax deductions and considerations of how you manage your books that are very, very specific to your industry. This is especially the case for an industry like construction or contracting. There's a lot of government compliance issues that you need to consider. There's, like, for instance, certified payroll that is much more complicated to do than just having a payroll software. You might even have to switch payroll providers because one of them might not do certified payroll in your price range or might not even do it at all. And then lastly, there's availability. Having an accountant be available year round versus someone who is seasonal might take their off season off for themselves. That's perfectly fine, but it depends on the business, how high maintenance you are versus low maintenance, how much communication you need all the time. That's going to be another consideration for your accountant. So hopefully that was helpful on your search for an accountant if you are searching for one, or maybe if you're considering finding a new one. And finally, we have the documents to prepare for your accountant at the end of the year. This is, of course, up to you. You can have maybe just the essentials like the legal documents here, and then have your accountant prepare the rest. For instance, like we mentioned before, if you don't have your bookkeeping ready, if you don't want to do your bookkeeping, you can have the accountant prepare the profit loss balance sheet, sales summary. But you're definitely going to need to provide the past 3 years, at least, of tax filings. That's going to really help your accountant understand what kinds of deductions you've taken before, what kinds of considerations you've had before, and then maybe some amendments that need to happen based on what they do this year. And then, of course, you're going to have your legal documents. This is going to help the accountant prepare your filings and also prove that you are the person that is in charge of your business. This is going to include your articles of organization / incorporation. This is the filing that you made in order to start your entity with the state. And then, of course, your EIN confirmation from the IRS. This is very similar to the documents that you're going to take to a bank in order to start a business banking account. Of course, there are some, I would say, there's a hesitant attitude that sometimes businesses have in sharing confidential information like this with an accountant, which is, again, why that trust and that communication and that relationship is so important. But I would say that these are definitely the minimums that an accountant would need in order to prepare your taxes. And then, of course, they're going to be asking you, they're going to have that open line of communication saying, hey, I need this now, I need this now. And it's just important to understand why. So even if you feel uncomfortable with giving them that information, the way that they respond to that uncomfortability is also important. If they can explain it to you calmly, if they can explain to you why it's important, why it's a part of their procedure, it just helps the process go along and that transparency open up a lot more. So that's a really brief, broad summary of how the tax filing goes at the end of the year. Of course, if you have any questions for us at the IHCC, feel free to reach out with this number below. And please contact our super assistant, Loli, who is, I think, the backbone of our organization, at loli@ihccbusiness.net. We're going to be sharing this presentation afterwards with all the attendees that have signed up. So if you have any questions or if you just want to have this contact information ready, you can definitely take advantage of that there. I know that once I move to this slide, you're not going to have it and it's annoying, but don't worry, we'll be sending this out. And now I'd like to transition over to Eli, who's going to be talking a little bit about planning for the future. So these are going to be recurring topics of taxes that we have every year, but there's also an importance of planning for the future, having that those funds that grow over time and that help business owners prepare for their retirement or just prepare for succession. So Eli, you can go ahead and take it away. Thank you.
Thank you, Esteban. I love the presentation, very comprehensive. I can see how it can be very helpful to the members. My job today is to try to introduce you to the idea that you need to always be thinking about putting some money away for your retirement. It's important that you prepare, no matter how young you are, gradually take money out of, as I said earlier, you take money out of the income that you're making, the revenue you're making through your business, and you put it aside into an individual pool of funds that you keep and you grow, you invest for retirement. Don't worry about investments. Don't worry about what you're hearing in the news. I can give you details on that later. The concept here that we want to make sure you understand is that when you make money, take some of that money and keep it for yourself. Pay yourself a salary, income, pay for sole proprietors, but take a piece of that, put it aside, and you reduce it. You reduce your income. And most people, when they do this, most business owners, when they do this, they actually take it as an expense item. Okay, they reduce either their W-2 income or they reduce their taxable income on the business side, and for yourself, you invested. There are two plans, several plans that are available to you. The simplest and the most economical one is a SEP IRA. I have up here just a brief summary of what that is. It's inexpensive. Okay.
Sorry to interrupt, Eli. I don't know if you meant to share that document that you were showing us earlier with this information.
Okay, here we go. Sorry about that.
No, you're good.
Can you see it?
Thank you. Yeah, now you're good.
There you go. Thank you. So the first plan that's available to you is a SEP IRA. SEP stands for Simplified Employee Pension Plan. Okay, it's simple, it's easy, it's inexpensive. You basically structure this as if it were an individual retirement account at a brokerage. Here at Merrill, I handle quite a few of these for employees. Some of them are sole proprietors. Okay, so they establish this, just open up an account, put in money on a regular basis. Every time there's a payroll deduction, it comes into the account, and then we have a strategy in place that gets invested. For someone who is self-employed, you're looking at about 20% of your net earnings. Okay? If you have an employee, you can put up to 25% of that individual's earnings into the SEP. The maximum you can do is $58,000. Okay? And I have several clients who actually have grown over the years their business, and they actually put away $58,000 of their income into a SEP. That means that $58,000 do not pay income taxes on. It grows. And when you think about that benefit to you as an employer, if you don't have to pay the taxes, get to keep it, and you get to invest it and grow it, that's not bad. over 10 years, over 20 years, over 30 years, it becomes a very large sum of money. If you want examples of how this works, please reach out to me. I'll gladly review that with you one-on-one. The other way to go about it is you can do an individual 401k plan. This is for ideally for individuals who are the only owner. By the way, if your spouse works in the business, you can do this with your spouse as well. It's called a solo or individual 401k plan, but you can include your spouse in there. Very low cost. You don't have to do a lot of the complex filings with the Department of Labor because it's an individual plan, which reduces your costs, your maintenance, and your administration. You can do up to, if you're under age 50, 19.5 of your income. Okay, so it's not quite as easy as a SEP. However, you can do 25% of compensation up to $58,000. And if you're older than 50, okay, for old people like me, we can go as much as $64,500. We've got the $66,500 catch-up, 2021. So that's a lot of money you can put away. Again, money that you don't pay taxes on. Here's another one, okay? If you want to do something that is a standalone, you make profit, but you want to have flexibility. You cannot anticipate because you have irregular revenue streams year to year, then you might want to consider doing a profit sharing plan. A little more complex to do, but not a big deal, okay? But you can change the amount of money that you contribute to the profit sharing plan depending on how much profit you make in a given year, hence the name, profit sharing plan. You can go up as high as 25% of an employee's income. Maximum income you can consider to make that 25% would be $290,000. If you make $1 million, God bless you if you make $1 million in income, but you can only do $290,000. 5% of $290,000. It will not. You cannot go above $58,000. Those are the three basic plans that historically, in my experience in the last 15, 16 years, that my business owners tend to use, small business owners, micro business owners, okay, sole proprietors, LLCs, individual attorneys, individual CPAs, someone who perhaps is a subcontractor and in road construction, and they don't know when their next contract is going to come up. So year to year, they just don't know what their income is going to be. So profit sharing plan works very well. I think that's it for now. I think there are many other plans. You've got about 5 other different plans, but I don't want to get into that quite yet. But if anybody has additional questions, if they want to explore other ways of deferring income, I'm available to have that conversation. By the way, just a teaser. When we start businesses, I know that the first few years is very difficult. Very difficult to grow, very difficult to maintain. So it's very difficult to consider putting money away. However, we'll say this. Over time, gradually, you put modest dollars away, you invest it in high quality investments. You don't speculate. You don't put money into a small business that has no record of performance. You put this in companies like IBM. You put this in companies like GE, like not Bank of America, excuse me, JP Morgan. I can't talk about my bank. I'm not allowed to do that. But you put it in high quality investments, and over time, these companies share their profits, and that's where you build up. For now, I think I'll just leave the conversation at that. If anybody has any specific questions in the Q&A, I'll gladly take those as well.
Thank you, Eli. That was extremely beneficial. And, while we wait for maybe a couple questions if they happen, I think that, this is also extremely important if you're a self-employed individual. If you have your own business, those the percentages that you can take out of your income taxes, or your, especially if you're, let's say, a S corporation and you have to pay yourself as an employee, those employee taxes also can rack up. So being able to, of course, put some of that away into a fund that isn't taxed, that's incredible. That can really add up in the long run. But yeah, I don't see any questions yet, so we can give it a couple seconds. But yeah, I just wanted to thank you, Eli, for stopping by. If you have I'll of course add your contact information in the email at the end to all of our attendees who registered, so that they can contact you. Is email the best way to contact you?
You actually put the email and then also put the phone number. And if there's anybody listening that would prefer to speak in Spanish, hablo español muy bien, y le puedo dar toda esa información en español.
Muy bien. Awesome. Thank you so much. And thank you, Hortensia, and the rest of the IHCC team for helping out.
Esteban, sorry, I do have some questions that I see.
Okay.
Like for Eli, does the small business need to have a minimum number of employees to work on that plan with employees?
Good question. No, most of these plans. Let's go back to. I'm still sharing my screen here, correct?
Yeah.
Yes.
Okay. So here. Okay. So a SEP. Okay. You can open up, basically what you do is you open up an IRA for each individual employee. It can be, this is perfect for someone who has less than 100 employees. Very low cost, okay? And I would actually work with each individual employee on their specific investment strategy. So this does not become the responsibility of the employer. This becomes the responsibility of the employee. We call them participants. So there's no limit. And the same thing if we look at profit sharing plans, okay? This can grow. You can have here 1,000 employees. Doesn't matter. Here, for the SEP, I would say that once you hit about 50 employees, this becomes a little burdensome. Okay? At that point, I probably would want to recommend a traditional 401k plan, and that's where, but we have resources, we have specialists who will work with the employers to help them streamline managing the administration of a traditional 401k plan. But for the most part, small business owners, SEP is the way to go.
Thank you. And one more for Esteban. Can you talk a little bit more about the difference between Wave and QuickBooks?
Yeah. That's a really good question. There's a lot of differences, especially when you start breaking down the different pricing plans. For instance, even within QuickBooks, we have a lot of different, there are a lot of different plans. For instance, you have a desktop software that's specific for contractors and can do like job costing and things like that. And then within Wave, you have a similar breakdown of different benefits, different features and services that they'll provide. Wave, of course, I think has the advantage of having a free service or a free version of their software that, again, does all the essentials that you're going to need to reconcile your books and then provide those financial statements like the profit and loss at the end, which is, I think, the majority of the reason why a lot of people get bookkeeping software. But let's say you need a little bit more complexity. Let's say you're starting to do payroll on QuickBooks or on Wave. That's going to start increasing the cost. But feature-wise, there's not a lot of difference. They're both actually very similar in how they look as well. So Wave does, I've read that Wave is a little bit more user-friendly. So if you're beginning bookkeeping or if you're trying to learn it on your own, I'd recommend Wave. And then as you grow in complexity, maybe Wave might not have something that you need, then you could go ahead and switch over to QuickBooks. Thank you for the question, though. That was a good one. And then I see another question here. that if you're a sole proprietor, what would be the best percentage to invest on these plans? I think this is more for Eli.
Actually, that's a pretty perceptive question. It all depends. It's a good conversation to have with me one-on-one, but generally speaking, it all depends on how much money, how much revenue you're bringing in, or how much income you're taking in. And then it depends on how much you want to defer to avoid paying income taxes. The strategy that we apply, that is the type of investments we make, depends on your tolerance for risk. It's very individualized. So for someone who is young, I work with them, but if they don't want to, if they're fearful of the market, of the volatility, the changes in price, early this week, prices dipped 1%, 2% on Monday and Tuesday. And then Wednesday, yesterday, the market went up about 2%. Today, the market's doing okay. I haven't checked it in the last hour, but that's not what we look at. We don't look at day to day. The way to look at the market is the long-term trend. Look at it in terms of 3 to 5 year running average. So we'll look back today. This is 2021. Let's look back at 2016. What was the market doing there? Where's the market today? Okay. Let's look at 2017. What was the market doing then? Where is it today? 2018, so on and so forth. Okay. And what you do is you end up having a view of what the market performance is on a rolling 5-year average. Okay. What I just described, going into the future. And when you do that, you begin to see that the tendency of the market is to go up. There's a lot of volatility, a lot of ups and downs in between, because you've got a lot of knee-jerk reactions to whatever happens in the world, or whatever happens in with the Fed, whatever, politics, okay, an explosion somewhere, okay, COVID, okay, and then everybody shakes it off and they go, oh, it's not a big deal, and the market comes back up. Okay? So again, these are the kind of conversations, the detailed conversations like that we have one-on-one, but generally speaking, depends on how much you want to save on your income tax, and it depends on how much growth you want to see in that pooled investment.
I think that's a really good point on like your risk appetite. I think everyone has their own opinion on the market and their own, their own risk appetite. So that's a really important thing. It's not so set in which investments you make.
I want to add something here, Esteban, if I may.
Yeah.
Nothing is worth doing if it keeps you up at night. And I mean that, nothing. So if investing in the market keeps you at night, up at night, don't do it. Okay? But if you look at what happens to investments over 5, 6, 7 years, over time, you begin to study that. You begin to say, you know what, let me try it, and let's see what happens. And that's the beauty of a retirement plan, is that you don't touch it until you retire, and you get to see what happens to the value of that plan as you add more money over time.
Yeah, that's really good. And that's a really good point on keeping you up at night. I think I've been seeing a lot of young people coming out of college, like out of their business and finance degrees, looking for that kind of golden goose that'll give you a like double or triple your return in 2 weeks, similar to what happened during COVID and similar to what happened, like for instance with GameStop. There's a lot of outliers happening, but it's extremely hard to keep track of that on your own. So I definitely recommend those long-term investments, and especially as a tax person, those short-term investment tax rates are brutal. So if you're not making too much back, it can kind of even be a detriment to you. So yeah, highly recommend it. There's another question here that we usually get from our clients. That's, how often should I be analyzing reports? What should I be keeping track of? This is a really good question, but it's really going to be based on what you're looking for in your business. I think if you're, for instance, at a point where you're maybe negative on cash flow and you're getting a little worried about what's happening with your bank balance, every week or every month, then it's going to be really important to narrow down that comparison between maybe week by week, month by month, so that you can see exactly what's going on and zoom in on what kinds of transactions are kind of maybe negatively impacting your cash flow. Maybe, for instance, you have a vendor that's charging you too much, or you have, like kind of the examples I made before, your rent is too high, or maybe your payroll is too high and you might need to cut back a little bit. Those are some of the things that you can keep track of. I think expenses, the more you break down your revenue and your expenses, the more exposure you have and the more you can see on exactly what kinds of trends and exactly like a breakdown of what's costing you too much, or maybe there's a product that's not selling enough that you're putting a lot of cost into. So there's a lot of nuance in how you can analyze these reports, but no matter what, the more detail that you're keeping track of, the easier it is to make those analysis, those inferences and those conclusions from your financial statements. And then if, for instance, you're doing really well, maybe you are just focusing on the product itself and you're not worried about your cash flow as much, then maybe you can broaden it out to a quarterly analysis. I'd still recommend quarterly as like the minimum, where you can meet with your team, you can meet with your accountant, and you can say, okay, let's take a look at these quarterly statements and let's just figure out, maybe there's some red flags we see, maybe it's just all good and we can just move on. But it's still, I would say the minimum is quarterly. Thank you for the question. Sorry, I was muted. But unless I see another one in the next couple seconds, I think we're pretty good to go. Hortensia, what do you think?
Yeah, I don't see any other questions.
Awesome.
Thank you. Thank you both for doing this. Very, very
Yeah.
helpful.
Thank you for organizing it. I was happy to help. And thank you, Eli, for joining me.
My pleasure. My pleasure. Anytime.
Yeah. So you'll be able to contact us all in that email I'm sending out. Feel free to reach out for any kinds of questions regarding financing for Eli and for like pension plans and plans for the future with Eli. And then if you have any broader strategic questions for your business, maybe finance, marketing, we have many experts here at the Illinois Hispanic Chamber across our different centers and programs where we can provide technical assistance at no cost. So thank you everyone for attending. Hopefully this was helpful, and we'll see you soon. Thank you.
Thank you, everybody.
Thank
Happy
you.
holidays.
Happy holidays.
Thank you. Bye.
Bye-bye.
Bye.